We're going to try to start implementing some kind of little jingle, some kind of song or something that we can play for the first couple of minutes for the stream. We're going to try starting that at some point just so that it doesn't start in the middle of me saying stuff. So welcome, everybody. Good morning. Mercenary SWAT, Drift and Juke, Rocky Mountain Gobblers, Greg Taylor, Rich M., Jalapenos. And good morning, guys. Welcome to the stream. We've got some exciting stuff to talk about today, some actual good news on the Russia-Ukraine front. And you can already tell there was good news by looking at the S&P and seeing how it just shot straight up for a couple of minutes right after the news came out. So we're going to talk about what was said. And first, we're just going to see how much did it shoot up by. About 1.5% in just a couple of minutes. So a big move for the S&P. It has declined since then. It's not actually remaining at those highs. From the highs to where it's at now, it's down about 1%. But all things considered, it's still in the green, and potentially as the market opens and we get some more volume coming in, maybe we'll see it move back up above this 430 level. Right now, we're kind of in a supply resistance zone right here, and it's good to see that we actually got to the other side of it, because it has been stopping us the past couple of times. If you look at the 5-day chart, you can see the past couple of times we've touched this zone, we've ended up getting bounced out to the downside. Now, this time we actually managed to get above it. We'll see if we can stay there. Hopefully we can. But the news that actually moved this thing, the news that actually moved this thing is hope there will be progress in Russia-Ukraine ceasefire talks. And those actually came from Putin himself, okay?
More than a week has passed since Russian armed forces invaded Ukraine.
I swear, one of the articles has a video that just keeps on playing itself. We'll have to close that tab as soon as we use it. But report that ceasefire talks could be gaining traction between Russia and Ukraine has been moving the stock market up. All right, Russian President Vladimir Putin said that certain positive shifts. All right, those are his words. Certain positive shifts have occurred in the talks, and people really liked the sound of that. Now, Putin is probably realizing just how big of a mistake, and he's probably been realizing it for the past couple of days, especially now that the invasion has been going on for so long. He's realizing how big of a mistake it may have been to actually start entering Ukraine, how detrimental it's been to the Russian economy and the Russian currency and to his relationships. He probably doesn't have too many friends in Russia anymore. You know, a lot of the Russian oligarchs probably don't like him very much. The Russian people might be a little bit more not so much in the know about what's actually going on, right? There's probably a lot of propaganda in Russia going on that's meant to fool the people, and maybe some of the people are still supportive of Putin. Maybe they think, oh, this is just the West is trying to destroy our economy. Maybe that's the case, but there are probably some Russian people even who are not too friendly with Putin right now, who don't really like him that much. They realize that the reason they have to wait in these long ATM lines is probably because of Putin. So Putin says this, right? He says that there have been certain positive shifts in the talks between his delegates and the Ukrainian delegates who are trying to find some kind of terms for a ceasefire and an end to the war. But unfortunately, satellite images are showing large Russian convoys regrouping near Ukraine's capital in Kyiv. Or near Kyiv, right? So we earlier, a couple of days ago, maybe last week, we even saw a big convoy moving towards Kyiv. We saw satellite images similar to this. However, that convoy had been stalled around 30 kilometers outside of Kyiv a couple days after it formed, supposedly, reportedly at least, on supply chain issues. So they couldn't quite get the supply chains all the way to Kyiv, or they decided to stop for some other reason. Those were unconfirmed reports that it was supply chain woes. But now it looks like another convoy has started making its way, and satellite images showed that armored units have fanned out through the towns close to Antonov Airport on the outskirts of Kyiv, and artillery howitzers are thought to be situated in firing positions nearby. So scary to see. These convoy pictures, though, I will say the convoy doesn't seem to be quite as dense as the initial one that we saw about a week ago. Most of these images, you can see a couple of trucks on the road, but not the hundreds of trucks that we saw in the other images from last week. So all things considered, it sounds like it's a sizable convoy. These are obviously just a couple of images. Who knows if there are areas where the convoy is more dense, but for the most part, it doesn't seem quite as bad as the last one. But then again, the last one didn't even get to Kyiv, so they got stalled out about 30 kilometers away. So this is leading to pressure building up for the West to help defeat Russia. And this is something that we've talked about a couple of times. Are we going to end up helping out in a real physical way with the Ukraine situation? Are we mostly just going to do sanctions and send aid? It seems most likely to me that we're probably not going to end up helping, okay? But regardless, as the war between Ukraine and Russia drags on, it is clear that Ukraine has mounted a far better resistance to Russian forces than many expected, but to continue to do so, it will need more help from the West. Now, we've already given a bit of help, and we're going to talk about some of the additional help that's on the way for Ukraine. But an analyst, a senior analyst at the International Security Program at a Polish institute, said there can be a point where this balance in the war is shifted in favor of Ukraine. So that would be an interesting development, right? If Ukraine actually started gaining the upper hand, started going on the offensive. And this analyst continues to say there could even come a point where Ukraine is able to not only resist Russian forces, but can launch counter-offensives against them and reclaim lost territory. Now, that would be very interesting, right? If Ukraine was not only able to reclaim lost territory, but imagine if they actually started pushing into Russia, how hilarious that would be. I mean, Putin would not be happy with it. It would be a very interesting situation if Ukraine starts going on the offensive, taking over parts of Russia. Seems like not too likely of a scenario, but what a world, right? That would be crazy stuff. So additional support from NATO's individual members in the form of arms, shipments, intelligence, and other forms of aid really made the difference in the current conflict and is why Russia is doing so badly, according to this analyst. So that's the kind of help that I can expect we would probably continue to send to Ukraine. And, fortunately, we're sending not just that, but we're also doing stuff to hurt Putin and hurt Russia. And in fact, one thing that we're doing today, all right, the U.S. and allies are going to revoke the most favored nation status for Russia. Joe Biden will announce today that along with the European Union and the G7 summit, the U.S. will move to revoke the most favored nation trade status for Russia. And essentially what that means is that we can start tariffing them, all right? We can impose tariffs on their goods. So stripping most favored nation status from Russia would allow the U.S. and allies to impose tariffs on Russian imports and increase the isolation of the Russian economy. Now, it's notable Canada was actually the first major U.S. ally to actually do this. They've already done it. And we're going to close this tab now because this is the one, actually, that keeps playing that audio, so it's super annoying. I've listened to that same story play for the first couple seconds for like 5 minutes, or the past, or like 5 times, sorry, not 5 minutes. So global tech firms are lining up to help Ukraine's world-renowned coders, and really anyone with specialized knowledge coming from Ukraine, because you guys know there are a bunch of Ukrainian refugees. There's a bunch of people who have been displaced by this whole war, right? There are people who are fleeing Ukraine, and a lot of them need jobs. So very fortunately, now in this world where you have so much technology, companies have actually come together on a website called Remote Ukraine, right? This new website that got started up because of the conflict. Dozens of companies have posted over 500 job ads for tech roles on this website, Remote Ukraine, that's been set up to help firms around the world hire Ukrainians. Now, most of those companies are in Europe. Obviously, Ukraine is in Europe, so it's a lot easier for them to evacuate to other European countries and start working there. But some listings are also from the US and Canada. Now, I don't know if those would entail the Ukrainians coming to the US and Canada or if it would be remote work. But all in all, it seems like a good development. It's a bit of a positive story, right? It's helping people out who need some jobs, and it's not just aid, right? These people would actually be working at these companies, providing some value of their own. So all things considered, good job, whatever companies are using this. And, maybe you guys, maybe someone here is a business owner and wants to check out that website. Maybe they got a small business running and they want to hire a Ukrainian. Who knows? Maybe for some kind of remote work. That might be far-fetched, but maybe. Probably mostly bigger businesses are doing this, though, that have the resources to deal with it. But anyone can check out the website. I haven't actually looked at it yet. Anyways, some of the other aid that's coming to Ukraine, all right? We're seeing a lot of aid for Ukraine. We're talking about a lot, at least, in this stream. So the Senate has passed the government funding bill, the $1.5 trillion bill, a ton of new spending going on just to keep the government running, the normal stuff that we need to spend trillions on every year to just keep things going. Prevented the shutdown, all right? So people weren't even really talking about that, but it prevented the shutdown. Some people were worried there might be a shutdown, I suppose, but, that does happen sometimes, right? It happens every now and then. I think because so much is going on in the world, the stock market's down, people are worried about Russia and Ukraine. I think people might have been a little bit more willing to just pass this bill and not do as much negotiating about what's in it and what's not. Just get the thing passed and prevent a shutdown. The last thing you want is a government shutdown right around when there might be a big war going on with the U.S. Who knows if that's actually going to happen? Probably not. But at the very least, we did also send some money to Ukraine, about $14 billion in Ukraine aid that can be used for humanitarian purposes and military efforts. So exciting stuff. I mean, it's not just food and medicine, but also potentially weapons that they could be buying with this aid. So very, very cool stuff. And, those were the positive stories that we've got. There are, unfortunately, some more negative stories, some somewhat scarier stories, but it's stuff that's important to be thinking about, all right? There are some important developments going on, and they're especially important for people who have not been too affected by the current situation thus far, right? If you're living in the U.S. or, anywhere really in North America or South America, you're probably not too horribly affected by what's going on in Ukraine. A lot of people in Europe in general, right? People in Ukraine especially, people in Russia, people in Western European countries are being affected by this a little bit more than people over here. But all things considered, there is something that could be going on that could start to affect us, and we all know it because we lived through it the past 2 years. But World Health Organization says it advised Ukraine to destroy pathogens in health labs to prevent disease spread. So look at this. Ukraine, obviously, a lot of countries do have health labs where they have a bunch of pathogens that they do research on. And the World Health Organization is advising Ukraine to destroy the high-threat pathogens housed in the country's public health laboratories to prevent any potential spills that would spread disease among the population. So similar to what people theorize happened with COVID. I don't know if we've gotten confirmed reports of it yet, but it seems like a lot of people think that the pandemic might have been caused by some kind of lab. And biosecurity experts say Russia's troop movements in Ukraine and bombardment of cities have raised the risk of an escape of disease-causing pathogens from a lab in Ukraine or multiple labs in Ukraine, potentially, should any of them be damaged. So it's a situation to think about. The World Health Organization is advising that they just destroy the pathogens, get rid of them. And PH Dragon says, destroy the evidence, maybe. And Rich M says, where's Fauci? Talk about this. We're actually about to mention him. So we're going to mention him because of this story right here. COVID was declared a pandemic 2 years ago, but public health experts say it's not over. And there's, a couple of people who are talking about this. And, regardless of where you live, most of the restrictions, if you're in the U.S., have probably been lifted. I think the CDC has lifted most restrictions. It seems like life is back to normal. We're going to look at some statistics regarding this, but first, we're going to look at this about Fauci. Attention-starved Dr. Fauci agrees to box Jake Paul. An exclusive from the Babylon Bee. He says, win or lose, people will be talking about me, and that's exactly what I need right now. Now, obviously, this isn't a real article, right? This is a parody article from the Babylon Bee. It's similar to The Onion, right? It's a parody news source, but a funny story, right? You've got to think that these public health experts, a lot of them probably, not that they loved that there was a pandemic, but, basic human psychology, they've got to like the fact that they're a little bit more important when there's a pandemic going on. So obviously they're going to say this thing is not over, that they're still relevant and important and people should listen to them. But for the most part, most of the restrictions are gone. It seems to be a somewhat low-risk situation now, according to the CDC even. And apparently, if you look at this chart right here, COVID-19 total deaths per million, it actually seems like it was a relatively low-risk situation regardless, if you look at this. So deaths per million, we're looking at 2,700 deaths per million. And if you do the math on it, as a percentage of the population, it seems pretty low, lower than I would have thought for how harshly people were reacting to this whole thing. It's about 0.27% of the population in deaths per, or just of the total population, apparently. So 0.27% of people over the past 2 years died from this thing, I guess, of the total population. 0.27% seems pretty low. I thought, you'd have thought with all the stuff going on, it would have been much higher, but we're not a health channel, we're a finance channel, so we're not going to talk too much about it. Regardless, there are things to be said regarding inflation, and we've got a story from Treasury Secretary Janet Yellen. She says Americans will likely see another year of very uncomfortably high inflation. So, incredible stuff. The Treasury Secretary Yellen is explaining to us that we're probably going to see a whole bunch more inflation. And who'd have thought, right? Who'd have thought we'd see a bunch of inflation? Now, thank you, Yellen, for letting us know that we're probably going to see that. A lot of people have been thinking we'd see high inflation for a while. It looks like it's really ramping up. And, I was looking at this, and I was just looking at this picture, and doesn't she look a little old to be the Treasury Secretary? I don't know. It looks a little old to me, but regardless, we're looking at inflation. Inflation's been going up and up and up. Our most recent CPI reading, 7.9% year-over-year inflation. And, that's probably pretty low compared to what it's going to get to be now that we have all of this oil inflation coming in, right? We're probably going to see pretty darn big inflation coming from these rising oil prices. We're probably going to see goods become a lot more expensive to transport. With all the supply chain woes, who knows what else is going to be affected. I know Russia provides a lot of food to the world, a lot of fertilizer, and with all these sanctions, we're probably going to see a lot more demand from other countries that are no longer getting their stuff from Russia. It's probably going to be worldwide inflation, not just in the U.S., but scary stuff to see regardless, right? This most recent CPI reading, I would expect this is not nearly as high. It's 7.9%. I think we're getting probably a decent amount higher than that, and it looks like Janet Yellen's on board with it. She's finally realized that we're going to see very high inflation. So thank you for letting us know, Janet Yellen. And, a lot of it has to do with oil, right? Oil prices, they're actually up very slightly today, though they have been falling over the past couple of days. If we look, we'll take a peek at the past 5 days just to see what's been going on with oil prices. And this does factor into some stocks that people are interested in, notably CEI stock. People are interested in that one. And as oil prices decline, that's not so good for CEI. In fact, you can see CEI is actually down. CEI actually moved down, right, as news that we might not be in as big of a conflict with Russia emerged. It actually happened at the same time, just about, that the S&P pumped up. A little bit of a delayed effect there, but all in all, good news for the S&P and the market is bad news for CEI. So whenever you hear something about, Ukraine and Russia potentially coming to a peaceful end, CEI doesn't tend to do so good. So it's a bit of a hedge almost in case the world gets a little bit worse. But all things considered, we're probably hoping that the conflict comes to an end, and a swift end. And I would much rather take a loss on CEI and have this thing end. And also, you've got to keep in mind, guys, CEI probably isn't your only play. So even if you take a loss on CEI because things come to a peaceful resolution and quickly, you probably have a bunch of other stocks that are going to be benefiting from that. So, it's not like, hopefully no one has everything they've got riding on CEI, but it is an interesting hedge position, right? Because as the market does better, CEI does worse. But as the market does worse, CEI does better. And if you want to make a bet that things might not be going the way that you wish, right? Things might not be getting as good and as peaceful as you were hoping, and oil might not be getting as cheap as you want, then CEI is a way to hedge against that, right? To buy into CEI is essentially to buy into the idea that maybe people aren't as good as we think, and Putin's going to do some bad stuff, continue doing bad stuff in Ukraine, and gas prices are going to continue to get worse. It's a bit of a hedge against that, right? So that's why I'm enjoying my CEI position, even if it is currently down a bit from where I bought in. I'm not too worried about, I'm just not too worried about it, right? Even if it went down massively, all things considered, my portfolio would probably be up because other stocks would be performing well. So CEI and gold have actually been decent hedges against a lot of the bad news that we've been getting lately. You can see gold is also down today on this news once again. Over the past year, though, if you look recently due to this conflict, gold's been up massively. CEI as well. CEI has also been up big. So, there are multiple ways to hedge against the current situation. And if you think things are going to get worse, then gold and CEI, or oil companies in general, are potential plays to look at and consider. But if you think things are going to get way better, then maybe you don't need those plays, right? Those are just for people who are worried about things getting bad in the markets. So speaking of things getting bad in the markets, it has nothing to do with a lot of the stocks that we talk about on the channel. We actually haven't talked about these companies too frequently that we're about to mention right here, but they're Chinese-based companies, Hong Kong companies, right here. Hong Kong shares of dual-listed Chinese companies plunge as U.S. delisting fears resurface. So you guys might have heard about this. And this is talking about companies, we'll pull up some of the charts, like NIO or Alibaba. And look at that, NIO's actually not doing as bad as I thought. There we go. So yesterday, NIO was down big. And Alibaba, B-A-B-A, is also up today, but doing somewhat poorly when this news really surfaced. It surfaced yesterday, but essentially what's going on is there are new fears out there about these companies potentially being delisted from U.S. markets. Now, we'll explain why that could be the case, okay? So these companies, we'll talk about how far they fell. Alibaba was down about 7%, Neo down about 11%, Baidu down 5%, NetEase down about 7%, and JD.com down about 15%, also on a bad earnings call, okay? But these China ADRs flagged by the SEC are the first to be identified as falling short of HFC AA standards, okay? And this act permits the SEC to ban companies from trading and even be delisted from U.S. exchanges if regulators are unable to review the company's audits for 3 consecutive years. So these companies have not been too compliant with the SEC, and they're at risk of delisting on U.S. markets. Now, it shouldn't affect the fundamentals of the company, right? It would just affect where they trade and the liquidity, which obviously when stocks are more liquid, that tends to be beneficial for their price, so people are selling them. And probably a lot of people in the U.S. are selling them. A lot of people are probably worried that if these things get delisted in the U.S., then there would be a big dump in shares all at once, right? That a bunch of people would be dumping them. So some people are prematurely selling out of these stocks like Neo and Alibaba and JD.com. I think we can check out JD. Yeah, it's down big too, and on a bad earnings call as well. So these stocks, unfortunately for anyone owning them, are falling. But all of them, pretty much, are also listed in Hong Kong. So you can still buy them on a Hong Kong trading exchange. And there are some, we might talk about some of them later on in future streams with some links that you guys can use to get free stocks, but we don't have those yet. So furthermore, we do know that Chinese and U.S. authorities are in contact and they could salvage the situation. So it's not a guarantee that these are going to get delisted. It's just something that's popped up from time to time. You've every now and then seen these companies at risk of delisting, and they typically don't perform too well while that whole situation is going on. You can see, I think that maybe towards the end of last year, we were also seeing some delisting fears. If I'm not mistaken, that was when we might have been seeing some. I remember it was a big story. I don't remember exactly when, but we certainly haven't been performing too well on a lot of these companies as of late. But we'll pull back up CEI and MUL and get those on the charts. MULN, there's some, it's performing a little bit better than CEI at the very least, but neither of these stocks are doing incredibly well today, right? It looks like some of the momentum in them has eased and faded away, but we'll pull that up right here on Stocktwits, right? You can see that these stocks on Stocktwits, unfortunately, are down count-wise on the most active list, right? MULN, although it is number 2, it has less than 6,000 mentions on Stocktwits, and CEI is down to number 6 at 4,000 mentions. So, unfortunately, a lot of the momentum in these stocks has faded away, and that typically correlates with lower prices, right? As fewer people are buying these stocks up and talking about them, the price tends to be a little bit lower, but we'll also take a peek at that on Google Trends just to see what we've got going on for MULN. And you can see, we'll probably see the exact same thing on CEI. Basically, you topped out when the stock topped out, and fewer people have been interested in this as there haven't really been new catalysts necessarily pumping these things up. So unfortunately, MULN and CEI have both been on the dip. It's not to say that interest couldn't resurface in them. Obviously, people could pick these back up. They haven't gotten super old and stale yet. It's notable that MULN did have 2 pumps thus far, though, and the second one was not as big as the first. We made lower highs, so it's not ideal. We'll see what goes on with it. It looks like we're finding some support at $1. Hopefully, we'll be able to stay above that level. It looks like both MULN and CEI are sticking around $1. MULN barely below. It looks like we're on this very bar right now, trying to get above $1, and CEI is at $1.01. So we're going to see what we can do on those. But Sundial, notably, is back up above 50 cents as of the past 30 minutes or so. It looks like they pumped up probably around the same time that the stock market started moving up. So good things for Sundial. And Sundial, once again, for anyone who missed the Sundial video yesterday, let me just catch you up on what we talked about. Basically, the big development with Sundial was that they moved back their earnings call. So it's on the 29th of March, 29th of this month. So about a week and a half after when we were initially expecting it. Originally, we were thinking the 17th might be the day that happens, but it's looking like the 29th of March is when the new earnings call is going to be. And potentially they're doing that because they're going to talk about the Alcana acquisition, which should finish at some point before the end of March. So by March 30th, we should get that Alcana acquisition going through. Maybe, that could be a good sign. Maybe they want, maybe they want the Alcana acquisition to go through, and then a couple of days later, maybe they want a good earnings call. They might have good earnings news. It could be good for Sundial. We'll see. If you look at the Sundial chart, I'll pull it up real quick for anyone who's interested. If you look at the Sundial chart, you can see the last earnings call, they did pump up significantly. Now, this one might be a little bit tougher because of the inflationary pressures. I wouldn't expect them to do as well because we have seen, once again, pretty significant inflation over the past couple of months. These past couple of months especially, we've seen this thing rising quite a bit, the inflation rate. And especially now, we get a lot of fertilizer from Russia. Now, that's probably not going to affect this earnings call all that much, but the next earnings call, if the cost of fertilizer is up massively because of the sanctions we've placed on Russia, boy oh boy, that could eke into their earnings call somewhat, right? So let me quickly search and see if I can figure out how much fertilizer we actually get from Russia. So, pull this up right here. Fertilizer. I don't know if we have a percentage on this, but all things considered, Russia's biggest exports are oil and gas. Fertilizer prices from us have spiked and could even lead to an increase in food costs. Yeah. Fertilizer, All right, so this isn't exactly what we want. We wanted to see the percentage of fertilizer that Russia produced. But thank you, Mike Steele, $5 Friday. Thank you very much, man. I appreciate that. These super chats, they roll in sometimes, and I appreciate them because YouTube does not. I know you guys say you see some ads, but boy, oh boy, does it not seem like YouTube is playing many ads nowadays. Revenue-wise, it's like a couple of cents per video at times. It's quite low what they end up paying for these videos. So I appreciate the super chats, guys. That definitely supplements the channel quite greatly. But hopefully we'll see Sundial doing good at this earnings call. It is potentially a good sign that they've moved this thing back, that they've moved back the earnings call. And maybe that means, once again, that we've got some good news coming. They probably wouldn't want to have bad news right after the Alcana acquisition. Reason being, I'll pull up a link. And we'll see if we can find the exact numbers. We can definitely find the exact numbers of what Sundial is going to give Alcana in exchange for their shares. It's a little bit of cash and a couple of shares. So I think here we go. This is the latest that we've got. For each Alcana share, they will receive 8.85 common shares of Sundial and $1.50 in cash. So they'll have not only shares, but also some cash as well. And potentially, they'll choose to use that cash to buy more shares of Sundial if they see a really good earnings call. And thank you, Niner Zulu. He says, I'm down with that. Happy $5 Friday, Mike. So thank you very much. I like that. But the Sundial Alcana acquisition, right? They're going to have some new Sundial shares in their portfolio. If they then all of a sudden see a really good earnings call, really good news coming out for Sundial based on, they're making more revenues, they're growing, they're acquiring, obviously, a company that the shareholders of Alcana are familiar with, and they all of a sudden have some extra cash in their accounts. They're going to be looking for a place to put that, and potentially they're going to dump that into Sundial, and it might be kind of like a side door almost into a share buyback, right? It's not a literal share buyback, but if they're just giving cash to people and then those people decide to use it to buy back shares of Sundial, it would kind of have the same effect. So all things considered, it could be very good for Sundial, but we'll see. We'll see what the earnings call brings, right? I'm not dead set on it being an amazing earnings call. Once again, we've seen some big inflation, and we've got Sundial in the bottom right chart. So I'll pull back up CEI right here to see what happens at this $1 level for for CEI and for MULN. Let me actually draw a little line at MULN just so we've got the dollar price point marked for us, because that is probably going to be a strong psychological level. Okay, there we go. So we've got it on the MULN chart, and hopefully we won't dip down too much. It looks like, boy, CEI just tanked on this bar, down 10% on the day, despite the market actually being green. Well, obviously, CEI is not going to be doing too well if the market is green, right? CEI is trading inversely to the market at this point. So the market is seeing some green. People are having a little bit more faith, in the peace talks between Russia and Ukraine. And CEI is moving down, it looks like, in a big way on that news. Muln, not necessarily tied at all to the Russia-Ukraine situation, but is still moving down a little bit. That's too bad. I'm not actually in Muln. I never ended up entering Muln. CEI was the one that I was a little bit more bullish on. It seemed like there still is potentially more reason for new catalysts to pop up for CEI than Muln, which Muln could pump up, but I'd be looking for a little bit more strength than what we've seen thus far, right? I missed out on the big run-up initially, and after seeing the big dip, I wanted to see us get maybe to new highs, and that could be a point at which we could take off from, but didn't quite happen with Muln. We'll see. It's not too late necessarily, but I will say things are not looking great for CEI. It's down about 13% now, and let's pull up the trends data just to see what's going on. It looks like, unfortunately, some people may have forgotten about this stock. Okay, so not quite. In fact, CEI, if anything, on Google is more popular than Muln. CEI is the red line. A bunch of additional people are searching for this thing, then are searching for Muln, which is strange to see because on Stocktwits, Muln is beating out CEI. Muln is the number 2 most active, and CEI is number 6. So strange to see the differences in different places. That's why it helps to check not just one listing. Now, notably, Stocktwits might be a little bit more small micro stock friendly. Muln is a much smaller market cap than CEI, I believe, if I'm not mistaken. I'm pretty sure it's minuscule, basically. It's under 100 million, if I'm not mistaken, at this point. Let's see. It should be, yeah, look at that. $34 million market cap at this point for Muln. CEI is much bigger, a couple hundred million, I believe, 286. So that makes sense to see. You can see on Stocktwits, people are going to be talking about really small cap stocks that could be pumping, and then on Google, the CEI is just such a bigger stock that obviously there are more shareholders of it looking into what's going on, and you're probably going to see some more people searching for it just in general. So that explains that. But on Reddit, there's actually a distinct difference between Muln and CEI, and the difference is CEI is actually on Reddit, right? Muln is too small of a market cap to be allowed on Reddit, I believe. I don't think if you're under, it might be 100 million or 120 million, you can't get on Reddit because they don't want people to just pump and dump a stock. Or at least you can't get on Wall Street Bets. Maybe it's on Reddit. But CEI is the number 15 stock. It's up a couple of spots. They have 19 spots up to stock number 15 on Reddit. Not too many people are talking about stocks on Reddit nowadays. It's fallen away a little bit in popularity over the past couple of months, really since November. Unfortunately, we've seen since November, a lot of people have been moving away from Reddit, and a lot of retail people have been getting out of the markets ever since the overall smaller market cap stocks, which you can see with the Russells, have started moving down since November. A lot of people have gotten out of the markets. And, congratulations to you guys, anyone who has stuck around in the markets and is still paying attention to stocks. I think that you guys are getting some pretty good buying opportunities, most likely, right? We're seeing stocks move down quite a bit. You're getting some pretty good buy opportunities out there, I think. So good job. A lot of people, when they see stocks move down in a big way, maybe they sell, maybe they hold, and they just forget about the markets. They stop paying attention. And that's one of the, if you decide to hold and just stop looking at stuff, that's one way to do it. But if you decide to sell and then just forget about the stock market when things move down, I think that's a big mistake. I think that you end up getting a lot of the really good buying opportunities over the long term on these big dips, right? When you're seeing companies, not necessarily these indexes, the indexes tend to not move down by all that much. Sometimes they do if it's a really big deal. But you look at something, we can pull up, we could even pull up space. It's down massively, We'll pull up the all-time chart for this, but it's down massively. It's down to just about all-time lows, very close to all-time lows, about maybe 10 cents off from the all-time lows of this stock. It's been as high as $62 when people are a little bit more interested in growth companies, right? When growth is doing well, stocks like Virgin Galactic and Sen and Smile Direct Club even, would tend to do much better. But over the past couple of months, and really the past year, just about for a lot of these stocks, a lot of these capped out in January or February of 2021, a lot of them are moving down in big ways. And, you've got to think that the smaller market cap stocks that have been hurt the most, when times do get good again, they're probably going to be the ones going up the most percentage-wise just to get back to where they were. It's almost like we'll pull up a little chart to exemplify this. But essentially, how I'm viewing this, and it's not a guarantee that this is going to be right, but, a lot of stocks, maybe the S&P, move, like this kind of, right? And you see little jumps up and down. Sometimes they're bigger than others, but typically, you see it move up and down and up, and sometimes it moves up for a long time and whatnot. That could be the S&P. But then when you see these smaller market cap stocks, they tend to be a lot more volatile. And they can move like this. I mean, they really make crazy moves, much higher highs, much lower lows, and pretend it's not actually overlaid on the S&P because obviously these would be moving down and up at different times. But the S&P, it's moving up a little bit more steadily. But if you're buying at the bottom of these stocks, you're looking at huge gains potentially compared to what you could be getting. If you're buying at the bottom of the S&P, maybe you're up 20, 30% to the next peak. These stocks could 5x, some of them could 5x based on how low they've gotten, even to just get up to their previous highs, they'd need to 5x. So if you ever think that these companies are coming back, if you ever think these companies are going to make new highs, I mean, look at Smile Direct Club. Just to make new highs of the past, of what they did. Let's even just look at 2021. To make highs of what they did in 2021, they'd be back up at $16. So that would mean 700% gain on Smile Direct Club from where they're at now. So a lot of these stocks, have been hurt quite a bit, and that's why I like buying during really volatile times the smaller market cap stocks. Right? It's nice to get into the S&P. You can get into the big tech companies, Microsoft, Apple, Amazon, Facebook, whatnot, whatever you want. But the smaller market cap stocks that are really just decimated during these times have big upside potential, I think, over the next couple of years because they have just been pushed down and down and down to really cheap values. And I mean, you can even look at Clove. Clove is down. It hit around $2 and it's already up about 60%, I believe. So from where they hit $2 at, they're up about, look at that, 60.59%, just about to where they are. So, there is big upside when these stocks start moving. It doesn't even seem like that big of a move, but just over the course of a couple of days, this thing really moved up massively. Who doesn't want a 60% gain over the course of just 2 weeks or so? So a lot of these stocks are getting pushed down in pretty big ways. So big fan of the smaller market cap companies. And we'll take a look at cryptos as well. We haven't looked at cryptos yet today, but they're actually doing not half bad, right? Bitcoin up 0.66%. Maybe getting on a little rebound from what we saw over the past couple of days. They did move down, unfortunately. They moved up initially on the executive order news. Then the next day they were down again. And maybe they're on the rise, right? Maybe they're starting a little bit of an uptrend, but we'll see. It's tough to say. Bitcoin's just been sitting around the $40,000 level for quite a while now. So it's going to be tough for Bitcoin to break out of this. For the past 3 months or so, they kind of just moved down into the low 40s, then high 30s, then low 40s, then high 30s, low 40s again, and they're just kind of fluctuating around $40,000 for Bitcoin. So we'll see what can get this stuff moving again. I mean, a lot of volatility in the world. A lot of people are not sure where to put their money during this whole crisis. Some people are putting it into gold, some people into stocks, some people are just holding cash, which I'm not a big fan of cash. I do not like holding too much cash because it seems like a worldwide phenomenon that we're seeing where cash is just becoming less valuable. We're seeing worldwide inflation. That's essentially cash becoming less valuable. We'll pull up the inflation chart yet again for anyone who's missed it earlier on in the stream. But boy, oh boy, inflation. It's running rampant. And Yellen saying we're likely to see uncomfortably high inflation this year as well. So when the U.S. Treasury Secretary says we're likely to see high inflation, you'd better believe it, because that's the last thing they want to admit, right? You got to believe it when they're saying there's going to be high inflation. So it's not looking like a good situation overall for holding cash. I'd be more willing to just buy stuff I'd be more wanting to just buy stuff with the cash, but I'd rather invest it in something than just buy consumer goods, right? A lot of people, the way they view it is inflation's going up. Now it's your chance to buy a bunch of luxury goods and things that you enjoy because the cash is going to be worth less, and that ends up contributing to the consumer price inflation, right? The CPI. But you see it in assets sometimes as well. When people were expecting, we'll pull out the chart of the last year, a lot of people were expecting big inflation, right? Not many people ended up moving into gold. Some did. We'll pull up the gold chart very briefly. Some people did end up moving it into gold. Since the pandemic crash, gold was up and it never actually returned to the lows. So, gold was up. A lot of people did move it into gold, but other people chose to move it just straight into the markets, into the indexes. And those have performed pretty darn well since all this cash got printed. A lot of money got given to the rich during the pandemic, and they decided to plow it into their favorite assets. And in addition to housing prices. So we're seeing, the prices of quite a bit go up in massive ways. And housing prices are something that could potentially be on the decline for the short term, at least, right? We're looking at the potential situation where we see some rate hikes. Maybe the housing market weakens a little bit as people aren't able to get interest rates as cheap as they once were. We might end up seeing housing prices go down. It's something to think about. I don't know if anyone's out there looking for a new house or is holding property at the moment, but obviously I would not be a fan of selling property just because of short-term fluctuation in property. The beauty of stocks is they're very easy to trade, very easy to get in and out of. But selling a property, boy, oh boy, that's a big deal. You've got to get a realtor. There are all kinds of fees you have to pay. Inspections have to be done. And you typically don't want to be jumping in and out of real estate investments because of all the extra costs that come with buying and selling real estate, because it's a big deal. It's a big physical asset. And there's all kinds of zoning regulations and requirements and whatnot, and you typically don't want to just be jumping in and out of housing. Now, one way that you can actually jump in and out of housing, something that I've done, is you can buy and sell REITs, real estate investment trusts. So a nice one that I like is Gladstone Capital, GAIN, and you can actually see it's a high dividend payer. Essentially what this is, REIT, is they pay out a bunch of dividends. This one, I believe, does it every month, and they pay out a dividend, based on the rents that they collect. So they buy up a bunch of houses, a bunch of properties, sometimes commercial properties, sometimes big apartment buildings, sometimes just individual homes, depending on the REIT, right? But they buy up properties, and then they pay you the rents, and they do tend to trade according to housing values. So as housing values move up, you tend to see the price of the REIT move up because they're actually owning a bunch of those homes. And so obviously, the assets under their management are growing in value. So the value of the REIT is going to move up as well. In addition, they pay out most of the rents as dividends. So you get basically rental income. It's a very easy way to go and buy a home. There's economies of scale because they probably have got their own realtors working for them. They know what they're doing somewhat when buying and selling homes, how to avoid a lot of the big fees and whatnot. So all in all, good stuff there. But that's one of my favorite ways to get involved in real estate without actually having to buy a house. You just end up getting into a REIT, and you can buy $14 worth. One share is $14.77 of Gladstone Capital. So you can do that, and then all of a sudden, look at that. You're starting to get some rental income every month from the dividends, and you're exposed to the housing prices. So it's something to look at, something to probably research a little bit more if you're interested in investing in real estate. You can see there was a pretty big dip that I was able to buy on during the beginning of the pandemic. I'm not sure exactly what price I bought in, but I know it was way cheaper than where it is now. I think it's up maybe 80-something%. So big gain on GAIN, and MAIN as well, Main Street Capital Corp. Also saw a massive dip and then a big rebound during the pandemic. So good stuff to see for these REITs, right? Obviously, they've been performing pretty well along with housing prices. So that's just an interesting way to expose yourself to another type of asset, right? If you're not looking at actually being ready to buy into a real property, then that's a way to potentially get exposed to the housing market. That's something that I found to be somewhat useful. So we'll pull back up CEI and MULN. It looks like they've been somewhat recovering. CEI somewhat recovered as the market moved down, right? And now the market's moving back up, so CEI is moving down again. It's just at this point, it's the complete opposite of what the market's doing. It's the exact opposite. So that's too bad for anyone who's really hoping that this thing is going to pump up and that we're going to see an end to the conflict in Ukraine, because it doesn't seem like we're going to be able to have both, right? You're going to get one or the other. Either things are going to go very well in Ukraine, as we covered at the very beginning of this stream. There's a lot of hope right now that we're going to see some ceasefire talks. Putin did say certain positive shifts have occurred in the talks. Just for anyone who missed the first 2 minutes of the stream, it's looking like it's becoming a potentially better situation, although there are a lot of military movements going on. There are a lot of Russian vehicles moving in on Kyiv, so it's not the best situation, all things considered, but people are looking at it like it's a good enough situation. Good enough so that they're selling their CEI stock. And they're selling it, it looks like, despite oil prices being up ever so slightly. Now, obviously, over the past couple of days, oil's taken a massive hit, right? It was up at 128, and now it's down to 107. So oil down in a big way, which, all things considered, I'm actually happy to see, right? I'd much rather my gas be a lot cheaper and there not be as far-reaching effects on the economy, and pretty much everything will end up being cheaper if we do end up seeing gas continue to move down, right? Everything will not rise as much in price the sooner the gas goes down in price. Drift and Juke TV says oil will go back up real soon. And also says if CEI does not go up by today, next week it will go up. It's certainly possible. It's certainly possible. I'm still holding CEI just in case, just as a hedge. It's not too large of a position at all that I took on it, but just as a hedge, just in case things get a lot worse, we really could see another pump up, and it would potentially be significant, especially, all it would take is Russia announcing that they're no longer going to be sending oil to the European markets, and we would see probably a big spike in oil prices and probably a big rebound in CEI. So it's yet to be determined if that's going to happen, and you're really not going to know about it until you probably get a notification on your phone. CEI is up 50, 100%, or whatever happens. If you have the news pegged to your phone, if you get a notification that Russia did that, it's probably going to be too late to buy into it. Algorithms are probably going to be on the ball with that as soon as the news comes out. It's probably going to be a big buying opportunity. And Kitchen also says, Rob is giving me the silent treatment. No, I have to say, I've been looking, unfortunately, at the comments less and less. Oftentimes, people are having their own little conversations in there, and it's not too relevant to read out, individual conversations between people. But sometimes I look over and I'll see something that someone says that's relevant to the stream, like what Drift and Joe was saying about CEI. It's definitely possible that CEI could be going up. I'm still holding my CEI once again, and it's really going to depend on what goes on with Russia and Ukraine. I'm in this almost just as a play to diversify away some risk, right? I want to be in a slight alternative asset, right? An asset that's going to move up the opposite of what the market's doing. So we'll see. We'll see what we get coming from CEI. I'm still somewhat bullish on it. Hopefully it moves down, right? Hopefully it moves down and the market recovers and the conflict ends. But I don't know if that's actually going to be the case. It's not been the case thus far. So far, things seem to have gotten, were a little bit worse and worse as this conflict has gone on. We've just seen more and more sanctions on Russia and more hostilities coming from them. Now things are shifting a little bit, right? Putin is saying there are certain positive shifts that have occurred, but we've yet to see any actual results, any actual real positive developments, right? We don't actually know what those positive shifts are. And maybe we'll hear about it later today. Maybe we'll see, stocks starting to recover in a big way. Hopefully stocks won't end up getting down below this support zone right here. Hopefully we'll end up seeing ourselves bounce back out during the latter half of the day. That would be very nice. It's not a guarantee, but that would be good to see. All things considered, though, stocks haven't been getting too much love as of late, right? I'm happy that we haven't been making newer lows over the past week or so, but things haven't been going great for the stock market. And now that we've got Yellen talking about very uncomfortably high inflation coming over the next year, we'll see what the Fed decides to do about it. I mean, they're loath to raise interest rates too much. Powell's probably going to do that 0.25% hike later this month. But they might have to do a little bit more than that. Obviously, we're going to see a couple of rate hikes this year, unless things change dramatically. But it's looking like a bad situation for inflation. We're probably seeing fairly significant inflation, much higher than what we've seen thus far of 7.9%. Sad to say, but soon. The good news is that soon, in the next couple of months, the year-over-year rate actually won't look that bad because we've already seen a bunch in the past, and so the increase from very low inflation to high inflation has already happened. Although if we see another real ramp up, then it's not going to look good at all. Then that's going to look horrible. So, looking at the max chart for this, you can see it's not unprecedented inflation. We do tend to see, especially way back in the 40s and the 80s. And the 50s and 60s even, big spikes up in inflation. So this isn't unprecedented, the amount of inflation that we're seeing, but it's not good. It's certainly not good, and it looks like we're going to continue to ramp up. So scary, scary stuff. Not an ideal situation, but we'll see what we get, right? Over the max, obviously, this is looking back over a long time. The past 25 years, notably, this is the highest inflation that we've seen. So with Yellen continuing to say that we're going to see very uncomfortably high inflation, I mean, I don't even know what she's speculating. How high is very uncomfortably high? It does not sound very good for the markets, right? It doesn't sound great for the markets. We'll see what the Fed ends up doing. I mean, it's potentially a situation where people might start fleeing the dollar and moving into stocks. It's really tough to say. That's why I like to be diversified. I don't just want to be in stocks alone. I like to have some gold and silver hedges as well, some cryptos as well, just in case, and even some cash, just in case. You never know. So, I'm always an advocate for being diversified. I think that really does help get rid of a lot of risk and helps me sleep better at night, right? I'm not worried about what's going to happen day to day because something's going up, right? Something's going to increase in value, whether it's the cash that I've got, the gold, the silver, the crypto, the stocks. I mean, it's impossible for everything to go down, right? It has something has to go down or something has to go up in terms of something else, right? So if everyone's moving into physical metals, maybe everyone's moving into real estate. Who knows where people are going to move? But if you've got a little bit of exposure to everything, you've got not all your eggs in one basket. You have a diversified portfolio. Something's going up. So day to day, it becomes a lot less worrying. Now, it also there's the flip side of that. Every day, pretty much something's going down in terms of something else. You always look at your good investment and you say, "Oh, I wish I just had it all in that," right? But that can't be the case, right? It's not going to be the case that you're going to pick out perfectly every time the best investment to be in. It's pretty much impossible to do over the long run. So that's why I like to just have some diversification out there, but also to weight more heavily towards things that I believe in. And something that I've been weighting fairly heavily towards, I know we talk about Sundial all the time. I know we talk about Sundial probably more than some of you would like, but I know there are some Sundial fans out there. Just to explain my case for Sundial, of what I think we've got coming, is one of the reasons that I like to buy into a stock, right, is not just based off of momentum. Sometimes the technicals can be good. They can certainly help you find maybe short-term movements in the price of a stock, and they can give you an overall feel of the general direction and whatnot. But when you want to see a big pump, it's tough to say, when is a stock going to explode, right? When is a stock going to blow up? Very tough to say just based off the technicals. But if you find other events, stuff going on in the world, say if you could have somehow foreseen a bunch of oil sanctions coming on to Russia and Ukraine, then maybe you could have, or not on to Ukraine, but onto Russia. If you could have seen, Russia's invasion of Ukraine leading to massive sanctions and big rises in the price of oil, you could have potentially gotten in on a big run on CEI, where, I mean, it went from the lows to the highs. Let's pull out the year chart real quick, just to see how much of a gain there really was on CEI from the lows to the highs. Pretty significant, it looks like. it was up, let's see, the high is about 300%. So if you could have somehow foreseen an extraneous event, nothing to do with the price action of the stock, nothing to do with the chart of the stock, but if you could have potentially foreseen, maybe oil prices will be going up, maybe that will be good for oil stocks, and gotten in on, say, CEI, then you could have benefited quite a bit. And obviously that was a short-term gain, right? CEI is down now, but we could be seeing something similar with Sundial, where if you expect that later this year there's likely going to be some big moves in cannabis legislation, if you think that people are going to start being more friendly towards cannabis legalization in the Senate and the House, then maybe Sundial is going to move up as well, right? It's impossible to say if that's actually going to be the case. Obviously, the potential gains in Sundial, a lot of them at least, would be negated if the government decided to drag their feet and not legalize cannabis, right? If they decided to do that, which is a possibility, right? That's a possibility. Certainly that could happen. Hopefully it won't, but it's a possibility, right? In which case, I would understand at the very least why Sundial didn't have a big run up if that didn't happen. Sometimes people are just trading the charts though, and they buy in, they hear some hyped up event that's already been announced, and nothing ends up happening with the stock. Maybe it moves down, and they just don't understand what they're doing wrong. But the way I like to do it is to figure out some events in the future that might be going on that could affect the price. And unfortunately, you've got to get in kind of early, because if you just wait until a week before the event, pretty much everyone's already on board, right? People are already thinking about what might be going on. The prices maybe moved up already, and especially once the event gets announced, that's when you start to see the massive rally. So that's why I'm bullish on Sundial, right? That's my thought process for Sundial. I think that we're probably going to see big appreciation in price as it becomes a much more prominent stock as legalization comes around. But we'll see. We'll see what goes on with it. I mean, it's not just Sundial. James Wood makes a good point. Medical Marijuana Inc., MJNA, another one, a very cheap over-the-counter penny stock, trading for 1.5 cents per share. Crazy cheap stock. Was able to, over the past, in 2021, pump up to 22 cents per share at the peak on the legalization news. So, or not just legalization news. A lot of cannabis stocks were pumping at this time. A lot of them were pumping for meme-related reasons. They were rallying somewhat with AMC and GameStop and all that, but a lot of it was legalization hype as well. This one was able to pump up to 22 cents. And maybe it can do something similar. And on literal cannabis legalization, if we actually saw that take effect, if there was a real law that actually got signed into existence, I think some of these cannabis stocks could exceed their previous highs. I think we could see really good stuff with them, but nothing's a guarantee, right? We're not guaranteed to actually see that happen. It's just something that we're speculating, that I'm speculating, and not financial advice. I'm not recommending that anyone buy into them. Just saying, I think that they could be pretty bullish over the course of cannabis legalization if we do end up seeing that happen. It's not a guarantee, but it's something to consider. Just something that I've been interested in lately, and overall, I'm pretty darn bullish on those cannabis stocks. So let's see, we've got Kitchener says stuff in the chat that we can't read, but regardless, we're getting pretty darn close to the end of the stream. So before we end it, I will implore you guys to, if you're watching on Rumble, if you're watching on YouTube, potentially throw the stream a like, throw the stream a Rumble, consider subscribing to the channel if this is your first time. And other than that, something you may wish to do is check out the Locals channel. It's the top link in the description. It's the free private stock group. You guys can see all the stuff I posted. You guys can choose to support it if you wish. You can pay if you want, but it's free for anyone who really wants to see it. We post pretty much every day, just something interesting going on in the market each day. A bunch of stuff. You can join the Locals channel if you have an account already, or you can make one for free. And you can consider joining it. But we post interesting stuff. Sometimes we post stuff from my portfolio, stuff that I'm engaged in. But if you guys are interested in joining that, it's Locals. It's owned by Rumble. So helping increase their user count is certainly going to be good for CEI, or not CEI, but CFVI, right? Play that I'm very bullish on, Rumble stock. Anyone who hasn't heard of that needs to look into it. We've seen some real volatility thus far. And I would guess that once they start trading as RMBL, we'll probably see even more good stuff coming from them. So before we end, yeah, everybody have a great weekend, Rocky Mountain Gobbler says. How low do you think AMC will go? Tough to say. Impossible to say how low it will go. How low do I think it will go, though? I mean, we've gotten pretty darn low already. Around 14, 15 bucks seems to be where we've bottomed out. I think if the market starts to recover, this could be the bottom. It really depends on what happens in the overall market. If we end up moving up in the market, then we'll probably see good stuff for AMC. If we end up moving down, we'll end up moving down. And that's all based on what Putin decides to do. So tough to say. I mean, real tough to say. I wouldn't really peg a specific price. I don't know if we'd move too far below 10 bucks, right? We might dip down below it for a second, but I think that's probably a place where we'd see massive buying pressure. People are getting back down to their original cost basis, some of the OGs, and that would probably be a place where we'd see some significant support if we get down that low. I don't think we would, but that would probably be a bottom for them. Who knows, though? Anything could happen. So that's what we've got in the stock market today, guys, and it is Friday, so of course, enjoy your weekend. Don't do anything too stressful over the weekend. Don't think about the stock market. You're all lucky to be living where you are, unless you're in Ukraine or Russia or some country that's being affected by that nearby. So you're all lucky to be where you are. Enjoy yourselves while you can. You never know when things are going to switch at the drop of a hat. I mean, people in Ukraine really got the tables turned on them, and things did not go very well over the course of just a couple of weeks. Things really dramatically changed. So you never know when that's going to happen. Enjoy yourself while you can. Enjoy the weekend. Take some time off. Don't stress yourself out thinking about money and stocks and finance and all that. Take some time off. Subscribe to the channel so you guys can join us on Monday. And other than that, guys, I'm pretty sure that's all we've got. So hopefully y'all will have a good weekend, and I'll see you guys on Monday. Bye.